I talk to them about being like a group of junkies who've relapsed, going, listen, man, I just need some liquidity, you know what I'm saying? I just ran into some bad subprime, you know? We just had complex formulas. We just didn't factor in greed and panic, you know? I just need $805 billion by Tuesday. Yeah, no, seriously. No, I would not screw you again. It's pretty crazy.
I've learned my lesson.
No, baby, this is not like the other time. Seriously, I just throw me a bad here, baby. Help me out.
Just give me a little bit.
Yeah, just a taste. That's all I need is a taste. I need $2.5 trillion. I'll pay you back.
Get me through 1 week.
Yeah, it's like they're going to print out a new $20 bill. The new Geithner $20 bill will be, instead of "In God We Trust," it'll just say "Trust me," and it'll be the little man from Monopoly going like this.
Welcome to Market Watch After Hours. As you can see here, the day did not go very well. What's not on here is the VIX, and that definitely hit somewhere near 30, if not tapped the high 29s. What a day. Are you Robin Williams right now? Jonesing for liquidity? Well, you know this kind of stuff happens, and you didn't prepare, it's on you, right? Right. You can't just be hoping your way through stuff. Hope is not an investment strategy. You gotta come up with ways to hedge against what you have. Protect yourself, and maybe even make a little bit of profit protecting yourself. Now, I'm not going to sit here and act like my portfolio did perfectly well today. Now, the total assets, it went down a bit, maybe 3-4%. But in that, the options on the other side started printing more money, right? So now I'm making some profit, right? Seeing if I can roll some. You got to stay agile if you're going to be an active trader. If you're not, this will just be a good time to buy stuff. If you're not looking to do anything active, you're just looking to park and wait, this is a good time. Lots of stuff are falling just on the news, not really on actual company faults, right? It's a good stock picker's market. I'd recommend staying diversified. I'm hearing that from some of my mentors. We don't know what's going on. A lot of uncertainty still around, so please keep yourself safe in that way. But don't take it from me. Take it from my mentor and friend, Steph Guild, CIO at Robinhood.
Opportunity markets. For those investors out there not familiar with that Wall Street lingo, what is a tactical buying opportunity, and is this one of them?
Tactical buying opportunity is one where you see a short-term dip in the markets, and it gives you an opportunity to buy some things on sale at a lower price than you would have before. Historically, it has been, typically if you go back again back to 1941 and you look at the 25 geopolitical conflicts we had, typically the recovery on average is, within 2 to 3 months from the bottom. And so, and usually 6 months later, you're even higher. It can be a tactical buying opportunity, and I hope it is this time. I think the one thing, and I'm not a geopolitical analyst, but the fact that we did have something. We've been supplying Ukraine with ammunition. We've been supplying Israel with ammunition. And the last time that Iran and Israel got into a conflict. And so I know I have been reading a little bit about lower supplies. But the fact that also Iran is on its own, and there are a lot of countries around it that are on the side of the U.S. And Israel, that you could end up seeing, hopefully this does not last very long and we get past it. And, as Inez brought up, the affordability issue can interweave in this. So I think this is a year, and I continue to believe that you just need to be diversified this year. Like, you should not concentrate your bets because a lot of things are happening.
No, that's a good point, Stephanie. And in time.
In all honesty, I couldn't have said it better, and I wasn't going to try. But diversification looks different to everyone. For me, I look to diversify by looking for things that we're going to need this year, or what we're going to need to build other things, right? You can buy a company, or you can buy the stuff that the company needs to survive, right? And if that company has competitors, the company you bought now supplies to other people, right? You're looking for supplies, materials, consumers, stuff that won't go to zero anytime soon. Another good diversification tactic is hedging. You own something, it's currently going down, you find a way to buy something that will go up as that position comes down, right? Protect your profits, protect from falling, that sort of thing. Hedging is something you should look into. You should always consider hedging your positions. Don't just buy stuff and hold it forever. Trading is important if you're going to try to make this a profitable living. Now, I have different portfolios for different opportunities and different objectives. They're basically split up into three: alpha, beta, and theta. And then you got a fourth one, which is our strategies portfolio.
On our Starliner L1649A, making sure everything is ready for our customers. First things first, we always start with the macro conditions, so we know what to expect throughout this flight. This time last year, we launched Robinhood Strategies, providing tailored, expert-managed portfolios and advice. It's the first time Robinhood has stepped out of self-directed investing and given you access to the wealth management experience. We so appreciate the trust you've placed in us and are now managing over $1 billion in assets. Actually, it's now over $1.5 billion. Next month, the results of our first year will be in, and we're excited to soon share our returns against benchmarks.
Depending on what time frame I'm using is what portfolio I'm going to be trading out of that day, or maybe multiple in a day. If you can think about different time frames, you can save, you can be more aggressive here and there because you're parked and hedged here and there. So day to day, you can make some more opportunities and go after them. And then over time, longer positions will just grow. You can kind of just ignore them. I tend to fidget with stuff, so I need something to kind of play with, which was at my detriment at first, and then I got good at day-to-day dabbling and trading. I say good, and really what I mean is safely positioned and well-sized. My risk is assessed. My exit and entry is assessed before I make these positions. And I'm not always right, but if I'm right more often than I'm wrong, then I'm making some profit. And if you take those profits and you utilize them or reinvest them somewhere else, you're good. But if you don't put your money to action, it's just a bunch of numbers, right? So consider you have goals for your money, and think about those goals on your day-to-day, right? Who's this money for? What's this money for? Let's keep those goals in mind. As we close up this episode, I want to move forward through the weekend thinking that next week will be better, but hope springs eternal and it's not an investment strategy. So I'm going to look forward to Sunday futures and see what's going to happen for the next week and consider our positions that way. Thank you for joining me on Market Watch After Hours. Have a great weekend. Farewell and a hui ho. I'll talk to you soon. See you on the porch.